Hey there, Safie here with your next S-Corp Straight Talk episode. Today I want to talk about the main red flag that the IRS focuses on when it comes to S-Corporation, and the reason why you may hear reasonable compensation or setting a salary for yourself being mentioned. One of the benefits of the S-Corporation is helping you to save on self-employment tax, which pretty much turns into payroll taxes once you are set up as an S-Corporation for tax purposes, because you're now an employee and you're paying into Social Security and Medicare through your paycheck, and then your company is paying the other half. So that's pretty much the same as when you're self-employed and you're paying self-employment tax. So self-employment tax, payroll tax is pretty much the same. Somebody has figured out that if I pay myself the minimum amount as an employee of my S-Corp, I'm going to save on self-employment taxes. Valid point, and the IRS knows this. And so when the IRS is looking for you to set up your reasonable compensation, it needs to be reasonable for the role you play in your business. If you're the owner, if you have a group practice, or if you're full-time in your practice and you have professional license, if you're a psychiatrist, if you're a psychologist, if you're a mental health nurse practitioner, even if you're a licensed clinical social worker, depending on where you live, of course, salaries can vary, but the likelihood that you are full-time earning $30,000 in that profession is not likely, right? So the IRS position is that they'll come in and say, these are the amount of hours you work in your practice, you're full-time or part-time. These are the amount of years of experience you have, right? Your proficiency level in the industry. This is the area you live in, your state, your county, the cost of living. And they pretty much don't look at much else, right? And they'll set a salary of what that should be. If you were to walk into a job with those criteria, what would you be paid? And then what are you paying yourself, right? Probably not $30,000. And I throw that number out there because I hear so often. Now, with that being said, they may not consider some of the other roles you play, especially if you're a solo practitioner and you're doing the marketing and you're doing the billing and you're calling the insurance companies and you're doing the admin work. So those roles obviously have different levels of salary attached to them. So what I do in the detailed S-Corp Strategy Tax Report analysis is we explore all the different roles you do play in your business, the amount of time spent on each of those, and all those other, factors that I mentioned, the area you live in, your expertise, etc. And from that, come up with a blended rate that you can support, that you have research for, and then implement that into your numbers to see now what your savings potentially are when we compare that number to your profit in your business, right? And what you have available to pay yourself, and if you can meet that number. So reasonable compensation is a big deal, and the reason why it's a red flag is because the IRS knows people are trying to set it too low to then save on the Social Security and Medicare taxes. What they will do is, if you do pay yourself that number that's too low, and you also take money out of the business as a distribution, or just transfer money out of the business account into your personal account, write yourself a check, and don't run that through payroll, they can go in and reclass those payments to what should have been your salary and charge you late penalties and interest on those payroll taxes that should have been paid out. And so that's what they can do, and that's where the big bills can come if you're caught, of course, and no one can know if you would be, but nonetheless, you want to do things the right way and follow the rules, right? So reasonable compensation, one of the big things on the IRS radar in terms of red flags. Just do the right thing, make the election when it's a right time, when you can truly pay yourself your true reasonable compensation. And let's not try to cut corners that way. There's other ways to legally strategize and reduce your taxes. All right. So that's what I wanted to share for today. Looking forward to seeing you in the next Straight Talk video. Take care.